the show. Today we'll be talking about stock symbol MMTLP and stock symbol CEI. These are some weekend thoughts I have on oil plays. Today is March 26, 2022. Let me start by saying that I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. So let's start by talking about some oil, right? So a while back, just less than a month ago or so, we saw oil prices surge above $100 a barrel when Russia invaded Ukraine. This was turned out to be not very high of an oil price. It got as high as $130 a barrel as the attacks escalated. And then we saw this piece of news where the UAE says it wants to increase, it wants OPEC to increase production, and we saw oil prices drop significantly to under $100 a barrel. And we also saw this piece of news. Turns out that shale companies in the U.S. Are drilling more, but we're not getting a lot more output right now because for a variety of reasons. But in general, it's very hard to increase oil production in the U.S. On a dime. It just doesn't happen that quickly. It takes a while. But we recently saw this. I don't know if you guys saw this or not. This is Houthi missile attacks Aramco. In case we didn't know, Aramco is the Saudi Arabia oil company. And it attacks the oil facility in Jeddah. Now, interestingly enough, this missile attack, it took place where a Formula One race is supposed to happen. This is so it's bound to get a lot of news as a result. The Yemenis rebels, or freedom fighters, or terrorists, whatever side you believe. I don't know. I'm not taking any side right now. Either they're freedom fighters or they're terrorists. In either case, they attacked the Saudi city that's hosting a Formula One race. So it's getting news, it's getting interest, and it's getting, they're getting people to recognize what's going on. As a result, oil prices started heading back up again. So if we look, we can see that oil prices closed this week around $111 per barrel. And this is the oil prices since 2021. So if we look at oil prices, we see that they've risen significantly since 2021. And if we look at it just as last year, it's still up significantly, right? It's up. It's gone on a tear. So that's the way oil has been looking. Probably, $130 was the peak or so, and maybe $130 won't be the peak. Sometime soon. Maybe it'll have surpassed 130. Hard to say. Anyway, let's talk about MMTLP. We're expecting a March update. A lot of people are asking questions. When's the divvy? What's going on? There's been this Form 10K that was released, and if we looked at the Form 10K, there were some quotes in there about the fact that there's no reserves there's no proved oil in the Orogrande Basin. As of December 31st, 2021 and 2020, the company's proved non-producing reserves total 0 barrels of oil and oil equivalents, right? As of at the end of 2021 and 2020, reserves did not include any value for proved undeveloped properties, right? When they talked about the Orogrande and Hazel project, they said the Hazel and Orogrande project consists of unevaluated properties in the progress of development for future production. As of December 31st, 2021, there are no proved non-producing reserves. So we talked a little bit about this, and this has to do with the fact that oil is categorized into, or the type of oil reserves are categorized into 4 different types of reserves: possible, probable, proved undeveloped, and proved developed. And if we look at the language that's used, reserves may be classified as proved if facilities to process and transport those reserves to market are operational at the time of the estimate, or there is reasonable expectation that such facilities will be installed. We know the Orogrande Basin is undeveloped. There are no commercial properties there, and there's definitely no pipeline or no facilities to process and transport those reserves right now. So definitely they will not be proved. You can have proved undeveloped. Okay, reserves in undeveloped locations may be classified as proved and undeveloped, provided the locations are direct offsets to wells that have indicated commercial production in the objective formation. We don't have any commercial production in the Orogrande Basin. Therefore, they're definitely not in the proved category. They would, at best be in the probable category. And that's what we're looking at. But, again, it's 3.2 to 3.7 billion barrels of oil, depending on how it's, depending on how you get it out of the ground. So I'm thinking that the plan right now is to get that stuff into the proved category. One possible plan is to drill some production wells, generate some revenue or an income stream, use that income stream to, build a pipeline, then you sell the property, pay out the dividends, right? Maybe via stock swap, which is a tax-free transaction. As of February 25th, 2020, we know that Torchlight issued this press release where they said the Catus well was producing, they had a peak 24-hour production rate of 15 barrels of oil per day, and 110 million cubic feet of natural gas, and but they hadn't, done a lateral drill yet, right? They hadn't done any fracking, but if they equated it to a 10,000-foot lateral, they can extrapolate that they're expecting to get something like 1,500 barrels of oil per day and 11 million cubic feet of natural gas per day. So, combined, they're expecting something in the range of 3,300 barrels of oil equivalent per day, and it's from a depth of about 5,700 feet. So, let's just say it's 1,500 barrels of oil per day that you can expect from a commercial well at the Catus site. Okay, if that's the case, $1,500 barrels of oil per day, running 365 days a year, means you're producing 547,000 barrels of oil per year. And if you sell the oil at $100 per barrel, it works out to a revenue stream of about $54.7 million per year. Now that's gross revenue, which of course needs to be split into the amount that you have as a revenue interest, which is about 49%. But anyway, if you had 10 producing wells, that would be about $547 million of gross revenue per year. With that amount of gross revenue, you could probably build a pipeline at that point, right? So if we look at natural gas, by the way, there was natural gas there. Natural gas since 2021 has also been rising. It's basically doubled from about $2.30 to over $5 and almost 60 cents now, right? It did go past $6 earlier in, or late in 2021, and seems to be headed back upwards as well too. There was word that the U.S. was supposed to start shipping some liquefied natural gas towards to Europe to help with their energy consumption and to wean them off Russian energy. We'll see. That might boost natural gas prices. If we look at just, if we look at the last few years, it's 2020. It got as low as $1.55 or so, but it's $5.80 now. It's been rising. So will it keep rising? There is a war. We do expect to be shipping natural gas now, or liquefied natural gas, to Europe in tankers. Could be interesting. So again, let's not forget the plan. The plan is to drill some production wells and build a pipeline, right? So That being said, what does it cost to build a production well? Well, there's this website over here, Oil and Gas Pipeline Construction Costs. And if we look in there, they say the average pipeline size in the U.S. is about 30 inches. In general, it's between 24 to 36 inches with an average of 30 inches, right? And it costs about $5.3 million per mile for a pipeline. And that basically means there is some variation in terms of cost, of course. In the Southwest, there's a correction factor of 0.74, meaning it costs less in the Southwest because they do a lot of pipeline construction there. Okay. So if we take that 30 inches of pipe at $5.34 million per mile, we have to go 40 miles to get to El Paso. Add in a correction factor of 0.74. We see that it would cost somewhere in the range of $160 million or so to build a pipeline to El Paso from the Orogrande. So that's what the cost of the pipeline could be to actually build out. So what about the revenue stream? Okay, how are we going to pay for that? Well, if you got some oil wells in production, right? Let's just say you got 10 wells. What would it cost to build 10 wells? Well, we know that we recently spent $14.2 million to build 4 wells in December of 2021. That means it's about $3.5 million per well, say. 10 wells would cost about $35 million. That $35 million investment in 10 wells would for $100 price of oil, generate something in the range of $18 million per well, right? That's assuming that you get about 1,500 barrels per day, 365 days of production, and with an oil price of $100 per barrel and COGS cost of about $30 per barrel. That means, $18 million or so. Let me just go over the math for you. It's quick, it's easy. At $100 per barrel price of oil, the COGS cost is $30. That's the cost it takes to extract the oil out of the ground. That means your gross revenue is about $70 per barrel, right? The Torchlight revenue interest is 49%. So that $70 drops down to about $34.30. The production rate we're expecting is about 1,500 barrels per day, 365 days per year. If we run that at that rate, we just multiply the $34.30 by 1,500 barrels per day by $365 days per year. We get something like $18.7 million. That's for one well. Okay, you build 10 wells, you get $187 million. That can more than pay for the cost of pipeline. Okay, so since that can make more than pay for the cost of a pipeline, you might as well take a loan, right? Based upon your projected revenue. So if you can get a loan for that, you probably could, let's just say, then you could build your pipeline. So let's see how that would affect the dividend price. This is the dividend price calculation. Let me just go over this quickly as well, too. Price of oil is $100 per barrel. COGS cost is $30. That means that your gross revenue is going to be $70. The value of oil in the ground is about 12% today. It's between 12 to 15% valued in the ground. So the dollars per barrel in the ground is about $8.40. We know we have got about 3.2 billion barrels of oil. So that means you've got about $26.8 billion, for the whole lot, for all the oil in our Orogrande Basin. Torchlight has a 49% interest. The rest is split across the university's lands, and so as a result, we've got something in the range of $13 billion that's going to go to Torchlight, right? You're going to pay a 10% underwriter fee. And then the new stuff that we added in is the cost of the pipeline. $160 million for the pipeline, $35 million to get 10 wells drilled, let's just say. And let's throw some interest on the loans, right? Because you're going to take a loan to to build the pipeline, let's say. So if you get a loan at 5%, you're talking about a total cost of about $165 million compared to $13.17 billion. That's not too much money. Anyway, so if you take the total asset sales of $13.17 billion, subtract the underwriter fee, subtract the cost of the pipeline and drilling the wells and the loan, subtract any taxes. In this case, we put the corporate tax rate at 0% because we're expecting a tax-free stock swap kind of a deal. You're talking about $11.6 billion. Okay, divide that across 165 million shares, you get about $70 per share. So as you can see, the total cost of the pipeline doesn't add that much. It's $165 million and all that. So figure it's about $1 or so, $1 difference per share out of 70. Not too much. Not too much difference. Now, if we do the same calculation at $130 per barrel, okay, which it could easily get to with the war, the cost doesn't change, but the price that you get per barrel changes. That means you could be getting a dividend of $100 per dividend. Okay, that's insane. Do I think we're going to get to $130? Do I think we're going to get to $130 per barrel? I don't know. It's probably not likely, but people are talking $200 per barrel of oil. If that happens, then $130 per barrel oil for sales is not outrageous at that point. It really isn't. So, when do we think this is going to happen? Well, we need to build about, we need to drill about 10 production wells, right? We know that 4 wells were drilled in a month, right, in December 2021. So I'm thinking it's not unreasonable to take 2 or 3 months to drill 10 production wells, right? And that's basically all you need to do is drill 10 production wells. The loan and all that can be fairly quick. The process to build a pipeline can be, once you have the intent to build a pipeline and you're trying to build it and you get it started, then at that point you can actually say, you're in the approved category, and then it's you're rocking and rolling. And then at that point, so let's talk about Camber Energy. Okay, Camber Energy is. It saw some recent price action. It looks to be on the move. It's what's going on with Camber. Well, it turned out that the CEO, James Doris, he recently made a new video, a vlog. Came out March 24th. Don't know if you saw it or not, but this is basically his video. It's pretty cool. This is just the start part. It's on Vimeo. It's pretty good. This is the intro and disclaimer that's going to be on. But after this, it gets really interesting. Safe harbor.
All right, we're going to go quick. There's lots of work to do, but I thought it would be helpful to give a brief update on a few items. But before we get into some of the details, I want to emphasize that everything I say is subject to the public filings of each of Camber Energy, CEI, and Viking Energy Group, VKIN, as well as the disclaimer at the beginning of this presentation. So let's jump into it, starting with Camber and the status of the outstanding filings. Now, the difference, and it's an important difference between today, what I'm going to share, and what I've shared in previous updates, is that we finally received necessary feedback to help the company complete the outstanding filings. Before we were handcuffed, we were never purposely refraining from filing anything. It's the number one priority in the entire organization to get the filings current. But we could not move forward. The auditor would not allow us to proceed with any filings until we got feedback on a couple of accounting issues or accounting items, and we got that feedback. It took months and months to get it. For whatever reason, I'm not sure, but in any case, we finally got it, so we have certainty. So now we have to just update the filings, and there's more than just a 10K. There's historical filings that have to be updated, but we know exactly what we have to do. The accounting team's working on it, And so it's not a matter if it's getting done, it's just when. And so there's, as we're sitting here today, it's a totally different environment, and 100% confident it is getting done. We're actually doing the work. We're not just sitting and waiting as was the case previously. So estimated time frame, realistically, between the 15th and the 22nd of April, I believe is a realistic time frame to get everything done and up to date. Again, it's more than just one document that has to be done. There are multiple, and including some at the Viking level as well, given some of the dealings between Camber and Viking. So good, we have certainty now. It's just a matter of doing the work and following the appropriate accounting practices and audit procedures. And we've got a great team doing it. And again, this, we're cleaning up the past. These are legacy issues that we were dealing with, and I don't want to throw anybody under the bus, but they fucked up, and we're cleaning it up, which is fine. It's getting done. In the meantime, as I've always emphasized, that we've never stopped doing business. And again, just to highlight some of the deals that have actually closed. This is not prospective stuff. This is actually closed, and all of it is closed, has been closed when we're still dealing with standing filing situation. So I don't like to toot my own horn, but imagine what we can do when we put the legacy accounting stuff behind us. So we closed on the license agreement for the patented carbon capture technology. We closed on the acquisition of the majority interest in Simpson Maxwell, and right now we're working with the Simpson Maxwell team on, among other things, helping with the expansion into Eastern Canada. We closed on the joint venture involving the technology for the medical waste disposal system, and you'll remember from previous updates that prior to getting involved in this joint venture, we made sure that Simpson Maxwell got approved as an authorized vendor in a National Hospital Association over the UK to facilitate the sale of the first units. So we're in good shape there. We're working on the initial sales efforts, and then we closed most recently on acquiring a 51% interest in the entities that have the intellectual property rights to this open conductor detection technologies, where identifying breaks in power lines and transmission lines, and to be able to terminate the power immediately, to help with overall grid hardening initiatives, and to help reduce the risk of incendiary events. Extremely important global problem. So we're in innovative, ready for market technologies, leading edge, with significant upside and no downside. Because you'll remember that on these deals, the joint venture partners took stock of Viking, right? This joint venture partner took stock of Viking. ESG, most of the consideration there, they took stock of Viking. So again, it demonstrates alignment, that people not only believe in the applicable technology, but they believe in the company's overall vision. And our objective is to become a leader in key industry sectors with exposure to a lot of upside, but not a lot of downside, right? There's no debt here. There's no debt here. Other than an operating line of credit, like there's a small operating line of credit. There's no debt here, and obviously we don't have any debt here. So we've been focusing on strengthening the balance sheet, improving the outlook, positioning ourselves for the future, and again, once we complete the legacy filings, we'll be able to devote even more time and attention to existing initiatives, and as well as proposed transactions that we're looking at. So overall, we're a few weeks away now, but again, we have certainty. We know exactly what has to be done. We're not just sitting on our hands waiting to get clarity. We have the clarity, which is great. And so we're looking forward to getting that work done and moving forward here. And if I get any more clarity on a specific date, I'll let you know. But again, it's a much different position than we were just a couple of weeks ago, which is.
So this is actually pretty important. They're about to do their filings, get their filings up to date, which means that they can move forward and execute on their plan. Just to recap, their plan is to clean up the paperwork with the SEC from previous management. Then the next step is they plan to announce a merger, do the shareholder vote for the merger, and that's a merger between Viking Energy and Camber Energy. That merger is going to result in a new company with a new CUSIP, so all the Viking and CEI shares will be retired, and new shares, will likely be issued. Steps 1 through 3 may result in the stock price increasing substantially along the way. Step 4 may result in a possible gamma or short squeeze. We don't know. In either case, we expect all the filings to be done by April 15th to the 22nd. That's a short time from now. And after this was announced, we see that there was a short attack on Friday, which dropped the price down from about a buck or so down to about 85 cents. So, that said, let's have a look at the price of oil. We know the price of oil has been increasing over time, and it's at $110 per barrel. What wasn't mentioned is that Camber Energy also has a bunch of oil producing plays in Louisiana. So, because if you look at the price of oil and you look at Camber Energy, the two don't look anything alike. But at the time that James Doris took over, the price of Camber Energy was around 27 cents. He brought the price all the way up to about $4.50 or so. And then the price collapsed, and the price collapsed because of a short squeeze. So if we look at the price of oil at that time, the price of oil was something about $75 per barrel. The short attack was around $4.50. And since then, the price dropped significantly. There was about a 90% drop in price of Camber Energy down to about 45 cents. And if we look at the price of oil, the price of oil today has increased up to about 47% gain in the price of oil. So there's been a 90% drop in the price of Camber Energy, 46% gain in the price of oil since the time of the short attack. So if Camber Energy just gets back to the time before the short attack, that's a 400% gain. We add in the price for, the correction for the oil price, because the oil price has gone up significantly. Adjusted for oil, we take the $4.50 and multiply by 1.467, and that means that you've got an adjusted price of about $6.60. From 90 cents today to $6.60, it's a 7.3x gain, which means you get about a plus 630% gain. Not bad. And that's not even counting a short squeeze. If there's a short squeeze, who knows? Maybe you get another 10x on top of that. So it's there's a lot of upside to Camber potentially. This is a tweet by Ihor Dusavan. I can't pronounce it. By Ihor, let's just say. Okay. Anyway, he says a short interest is somewhere around $41 million. 43.99 million shares have been shorted. So there's a fair amount of shares that would need to cover. So as a result, a short squeeze could happen there. This is a tweet by Trimedia Events or Trime Events. Basically, Camber Energy has it's got a lot of upsides. No reverse split. There's no split. There's no debt on Simpson Maxwell or the open conductor, the medical technologies. Or ESG. It's got no debt at all. They own the Reno plant. So what was not mentioned in that last video is that they bought a renewable diesel plant in Reno, and they own that outright basically, and that'll produce renewable diesel fuel. The price of oil's up. The price of diesel fuel's up even more. So there's a lot of upside, very little possible downside, right? The accounting issues are all being taken care of. As you can see, they're refiling everything, right? So we got 8Ks coming up, and he talks about the target date of April 15th to 22, and says that there's a lot of possible upside here. Okay, more upside than AMC and GME, and I don't know about that, but if you think about it, he's saying you get for 500%, 500% for Camber Energy is $5 is a $5 price in in stock, and 500% for GME is about $600. So he's saying, which do you think is attainable first? I don't really know. I mean, GME could do quite well. In either case, I think Camber Energy can do quite well as well too. Okay, so I think Camber's got a long ways to go. The price of oil's $111 per barrel, and it could be that maybe one day you'll probably see something like this happen, right? Daddy, how do you get so rich? Well, you could say I bought CEI and MMTLP back in 2022. I wish the son's saying fucking legend. So anyway, that's my thoughts on MMTLP and Camber Energy. Weekend thoughts about oil. So let me end by saying, or by repeating, I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. Good night. Goodbye.